The S&P 500 is now down 22 or 25% year to date, and after hours, after Apple, Amazon, and Meta reported earnings in the last 2 days, the market is crashing even further. The Nasdaq, the US Tech 100, is down 3% after hours. The S&P 500 is down 1%, and it looks like for some reason the Dow is up, right? The more conservative companies. So this right now is the opportunity for long-term investors to stick to the plan and get rich during the 2023 market crash, the rest of 2022 market crash, the 2023 recession. These are the opportunities if you can stick to your plan and continue investing for the long term. Maybe the best thing to do is to buy indexes, and that's just fine. These are the opportunities that investors wait their whole lives for. And if you can keep your job, keep earning income, cut your costs, earn more over time, and continue investing, these are the times that millionaires are created. And I'm gonna show you exactly how in this video. So first of all, it does not feel good to be investing right now, and it hasn't for this entire year. Again, the market's down 20 to 25%. Amazon stock sinks 19% on weak guidance. AWS records its weakest revenue growth to date. Dogecoin surges 35% as Elon Musk's Twitter deal approaches close. Okay, ignore that. Meta shares plunge 24%. Apple beats but comes up light on iPhone sales. Everything is negative. There is everything going on in Ukraine. There is the recession issues. Rates are rising. Inflation is high. All of these issues, all of these reasons to scare you out of the market. Amazon GAAP earnings per share, they beat on that, but they missed by $370 million on revenue. The stock is down 15% after hours. Meta stock dives 25% after stark revenue report and the miss on profits. And Meta's even down after hours today after Amazon and Apple reported, even though they were down 25% today. And I own Meta. I shared this in a video on my channel where I track my portfolio, so just look for that video. Now we're going to talk about how we can turn this fear into an opportunity. This is where we're at on Apple, Amazon, Alphabet, Meta, and Microsoft. Some of the most respected and most dominant companies in the world. Apple is down 20% year to date. Amazon's down 40%, and it's going to be a lot more now because this was before the market closed today. Alphabet, Google is down 38%. Meta's down 75% year to date, and Microsoft is down 34% year to date. Over the last 10 years, you can see that there has hardly ever been another time where all of these stocks were down this much. Not even during COVID in 2020. There was a tough time for tech stocks in 2018, 2019. Google was down as much as 60% in 2014, 2015, 2016 timeframe. But guess what? Even with that, even with the stocks down as much as they are from their highs right now, again, anywhere from 20 to 75%, the growth of $10,000 invested in each of them over the last 10 years has now turned into over $300,000. That's turning $50,000 into $300,000 in 10 years. And if you go out longer than that, back to 2004, when just Apple, Amazon, Alphabet, and Microsoft were public, $10,000 invested in each of them, that's $40,000, has now turned into something like $3 or $4 million. So this is an opportunity. This bear market is an opportunity. If you can keep your job, focus on your expenses, lower your expenses, and stick to your plan as a long-term investor, this is your opportunity to become a millionaire over time. And if we look at this, this is a website. It's called Peters Financial. I just looked it up, but the S&P 500 from 1970 to 2022, $10,000 invested just in the S&P 500. You could buy VOO, the Vanguard Index, and get exposure to the entire S&P 500. $10,000 invested in 1970 to 2022, never touching it, has turned into $2.2 million. That's 52 years, $10,000 to $2.2 million, never adding another dime. If you would have added every single month, imagine how much that would be worth right now. It has averaged 10.88% a year, and look at every single thing on here is a reason not to invest. The Cold War, the fall of the Berlin Wall, Taliban rises to power, the 9/11 terrorist attacks, Hurricane Katrina, the Boston Marathon bombing, COVID-19. All of these are reasons not to invest, right? But the market averaged almost 11% over a year for those 52 years. This chart right here shows the return of different asset classes. This is why I stay in stocks. Asset classes following the S&P 500 market peak before the financial panic of 2008, right? So the absolute worst time to be invested, right before that panic. And it shows stocks have averaged 10.1%, gold 6.8%, 10-year treasury bills, the safe thing, 3.6%, inflation has been 2.2%, home prices have risen 3.7% per year, cash 0.7%, and oil 1.5%. Stocks win over the long term because they are companies that produce earnings and grow over time. And so here's a scenario, right? I have about $100,000 portfolio invested in the stock market right now. If we use that 10% return, which is what that market has averaged over the last 52 years, it could be less than this, it could be more, who knows? We have 30 years, so I'm in my 30s now, 30 years till retirement, right? And adding $1,000 a month, that would get me to, in 30 years, $3.8 million from here. And the more the market goes down right now, the higher the likelihood that your return is going to be, higher, because you're starting from a lower overall number, right? A lower overall S&P 500 value. What's the best way to increase your chances of being a millionaire, right? Well, if you can average $2,000 a month instead of $1,000, then you're almost at $6 million over the next 30 years. This is a lot of money, right? But it's aspirational. Over our careers, let's up our skills. Let's try to get better jobs. Let's try to increase our savings rate and save more over time and enjoy life along the way and invest more over time and stick to it and don't get scared out of the market. That's how you turn this 2023 recession into your opportunity to become a millionaire.